Hello everybody, this is Jody Samuels on the Elliott Wave desk powered by FX Traders Edge. As part of the Traders Indicators series, today we're going to take a look at day trading with the average true range. The last video was all about the average true range, and today we're going to take it one step further, how you can actually use it in your day trading. We're going to show two examples, one with the dollar Canada and one with the S&P. Let's start with the dollar Canada. The 14-day ATR and 100-day ATR are both roughly 62 pips. The 24-hour range since 5 o'clock New York time to 7 a.m. New York time is with a high price of 133.20 and a low price of 132.84. So if we then calculate what the potential range could be and add the difference between the actual range and the 62 pips, we can determine how much room there is on the top side or the downside for dollar Canada. So the overnight range so far until 7 a.m. is 36 pips, giving room for another 26 pips on either side. That's 62 pips minus 36 pips equals 26 pips. If dollar Canada breaks higher above 133.20, the top side target would be 133.46. If it breaks down below 132.84, the downside target is 132.58. But why don't we take a look at the actual chart itself so I can show you how I arrived at the ATR and the daily ranges. This is the daily dollar Canada. Make sure you use the daily chart for the 14-day ATR and the 100-day ATR. It's really 14 and 100 periods, but by using the daily chart, you're actually looking for the 14-day average and the 100-day average. That would be the average true range over the last 14 days or over the last 100 days. So just by putting my cursor inside the average true range box, I can see that the average true range for the 14 days is roughly 62 pips, and the average true range of the magenta true range, which is 100, is roughly 64 pips. So I've used 62 pips for both. This is a 30-minute chart of the dollar Canada, and this is price action until 7 a.m. New York time, 7 a.m. Eastern time. The red lines across the top are the highs of the trading range for the day before. The blue lines across the bottom would be the lows of the trading range for the day before. So for today, this red line on top is the high price of yesterday. This blue line underneath is the low price of yesterday. You see the dotted line right down the middle? That's the 5 p.m. mark for the change in the day. That's 5 p.m. Eastern yesterday. And all I did was I put my cursor in to see what the high of the range was, and we see that it was 133.20, and the low of the range was 132.84. That is the period leading up to the New York Open at 7 a.m. And you can see that during the night until 7 a.m., the dollar Canada just traded in this range. I just showed you how we came up with the high price, the low price, the range of 36 pips, giving room for another 26 pips on either side. The next thing to do is to look at the Elliott wave count to see the direction of the market. We want to have an edge. We want to have an idea of where we think the market is going to go. Is it going to go up? Is it going to take out 133.20, or is it going to break down through 132.84? And then we set up the charts with the previous period range, like I showed you, going back 5 days on the 30-minute chart. And we use the pivot points on the side for the current day. Now let's get to it and let's take a trade. Our Elliott wave count on the dollar Canada shows that we are completing a wave 4. This is the daily chart. Completing a wave 4. A wave 4 is a correction of the major trend. So we have 1, 2, 3 in green. So those are the impulsive legs. Waves 1 and 3 are the trend legs. And then we have a correction in the wave 4. And we're expecting a move down for the wave 5. That's our direction. Our direction is lower for a wave 5. Now I'm going to start the price action on the dollar Canada chart, and I'm starting it from 5 o'clock on yesterday, 5 o'clock yesterday, and let's see what happens. And then I'm going to stop it as soon as we get to 7 a.m. Okay, I just stopped it at 8 a.m. actually, 7 a.m., 8 a.m. And we come to the same conclusion that we have the prior period trading range, and if we break down based on our Elliott wave count, then we would want to target a certain level. Now the dollar Canada, if you look at this 30-minute chart and go back 5 days, we see that there is a lot of topside resistance. So the dollar Canada never really wanted to go above 133.50. It seems to be capped at 133.50. Here is capped at 133.40. And then for today so far, it's capped at 133.20. This is the pivot. The black line is the pivot. There's nothing wrong with selling at the pivot or selling on a rally to the R1. However, I don't think it's going to get to the R1 given the price action that we had previously. So if we sell at the pivot, we want our downside target to be what we already calculated, and with the 62 pips trading range. So the downside target is 132.58, which also happens to be S1, so the first support point for the pivot point. So there's your overlap, your synergy, 132.58 for the target, and the S1 level is 132.60. The total profit would be around 40 pips for a day trade. So price trades sideways. We're in at 133, and we're leaving the stop loss above R1. Price moves down, price moves down. Little consolidation. And our price target is hit. Let's see what else. Okay, it goes even lower, and it goes roughly 10 pips lower. So that's the trade for today. And this is just for educational purposes. You can do this yourself. You can pick your own markets out and use this exact same analysis in order to find your trades. Now we're going to move over to the S&P. Here's the S&P. The 14-day ATR is 64. The 100-day ATR is 36. The 24-hour range, since 5 o'clock New York time yesterday to 7 a.m. New York time, we're using the overnight market for the S&P. We had a high price of 28.87, a low price of 28.08, giving a range of 79, already above the ATRs because of increased volatility. So what is the likelihood that it's going to continue further down? It happens, but it's not very likely if you look at the probabilities. So we could look for an opportunity to trade the range. We set up the charts with the previous period range going back 5 days on the 30-minute chart with the pivot points on the side for the current day. And of course, we look at the Elliott wave count and we take a trade when the opportunity arises. Let's look at the charts. The Elliott wave count shows us going lower, and we've consolidated in a nice sideways consolidation, and the count is suggesting that we would go lower, barring that we don't take out all of these market tops right over here. Now let's go down to the 30-minute and see the setup. Here's the 30-minute S&P with the pivot points along the right-hand side and the high and low price from the previous day. The 5 o'clock price for yesterday, the closing price or the low price, is this low price of 28.08, and then the high price is 28.86. So just what we said, a range of 79. So this is the trading range in the after hours market for the S&P before we get in, before 7 a.m. So we look at this and we know that the wave count is bearish. We also know that we we've traded well beyond the average true range for the S&P. So what we're thinking at this point is that we're not going to break out of this range, that we could trade down at find support and then trade back up again, but this is going to be the trading range. For the S&P, let's just move price action ahead and see what we see and see if we can find anything that we would like to do. So market tests the pivot, fails, goes through the pivot and closes above the pivot, below the pivot. So far we're just trading around the pivot. And now we attempt to go lower. We're back up at the pivot again. We're back through the pivot again. So the S&P is pretty well sideways in the New York market. Okay, we're testing the previous high now. And that's it. That brings us to the end of the trading day. So we stayed within the range. There wasn't really too much going on here. There was no definitive trade to take. We didn't bounce off any key levels. If anything, you could have sold at the pivot like we did with the dollar Canada and left some profit-taking levels down to the previous low. And maybe the first profit-taking level would have been hit. But basically, this has been a non-event today. So what did we learn? We learned how to use the ATR in day trading along with the previous period range going back 5 days on the 30-minute chart with pivot points on the side. A nice little trading strategy for day trading. Use this in combination with your wave counts and you should be good to go. FX Trader's Edge and the Elliott Wave Desk endorse Motive Wave. For a 2-week trial, please go to bit.ly/E charts. FX Trader's Edge and the Elliott Wave Desk also teach an Elliott Wave based trading strategy called the Wavy Tunnel Pro. If you'd like to find out more about it, please go to wavytunnelpro.com. Thank you so much. Have a great trading week, and we will see you next week.